episode of the Promise Show, this time with Agricultural Insurance Consortium, or what we call the Agri-Insurance concept. And today we are having a very special guest, a senior consultant called Mr. Makosia John, who will take us into deeper analysis or the depth of what this whole insurance industry is all about, especially for the farmers, for the people who consume the products that we farm. Is it livestock? Is it produce? We're going to hear all that from our senior consultant today. So let's go for a short break and come back and dig deeper into this whole concept. Thank you. Welcome back from that short break. So let me ask our host today to say hello to us.
Hello viewers, I'm John Makosia, Senior Consortium Officer at the Agro-Consortium. The Agro-Consortium is a coalition of insurance companies that are providing agriculture insurance. It was set up under the Uganda Agriculture Insurance Scheme, which is a public-private partnership between the government of Uganda and the private sector. Of course, if you have been in Uganda or you're living anywhere else in the world, you are aware that risk is something we can never run away from. We are aware of the effects of climate change. We are aware of the changing weather patterns. Gone are the days where we knew when the rains were starting, when they end. Our grandparents back in the day knew at the end of July they start planting. But today, you are not too sure. And even then, when the season begins, you have no guarantees that you will be smiling back from the garden at the end of the season. So, as long as you decide to invest in agriculture, or like in life generally, there are always inherent risks. And always the question you need to ask yourself, what are the risks in what I'm venturing into? With agriculture, there are a number of risks that are there. Some of them are human resource. Others are financial. You may have risks which are related to, let's say, their production risks. And among the production risks, these are so many. You may be looking at, for example, if you're into livestock production, you have snake bites in cattle, there's lightning, there are diseases, there are uncontrollable pests, and then even as we're saying, the effects of climate change, drought can come in. We've had cases like in Nakasongola, where cattle have died just because the herdsmen do not have the pastures, they don't have the water to give the animals. People are forced to sell their animals prematurely or underweight before the due time. I remember there was a time in Kampala we were buying a kilo of meat at 13,000 shillings. But in Nakasongola, because of the high death rate of the animals, because of the drought, people were being forced to sell meat at 1,000 shillings a kilo. Now, what does that mean for a herdsman? Number one, loss of income. Number two, loss of the animal in itself, assuming it died of drought. Number three, you have depression, you're stressed. If you borrowed money, you have no ways of paying back that loan. On the other hand, the financer also is thinking twice about lending to you, because among the things that will happen to you, your credit rating is going to be lost because you've taken too long to pay back the loan. On the other hand, the financer is looking at your venture as being very risky. And that is how the Uganda Agriculture Insurance Scheme was born, because among the key things they were looking at was to, first of all, avail insurance to the farmers, increase the uptake of agriculture insurance, first of all, to the public. Then number two, unlock credit towards agriculture. Because back in the day, financial institutions thought that lending to agriculture was risky, and should any of these disasters strike, how will the farmer pay back? But with insurance now, we have seen the trends change, and to some extent, even some financial institutions preferring lending to agriculture, most especially during this COVID time, because we've had 2 lockdowns so far in the country. And from the lessons learned from the first lockdown, agriculture remained opened and farmers continued farming, being isolated communities and not crowded. So farmers were able to continue the production to be able to feed the masses and the public. And in so doing, much as the commercial other businesses were suffering, but at least with agriculture, people had food, and those that invested in agriculture were able to pay back their loans in case they did suffer loans as a result. Suffer loss as a result of, let's say, some of these unnamed risks. And that way, at least agriculture has continued to increase the investment in agriculture. Those who we have known of some businessmen who have left actually normal trade and have decided to go into agriculture instead. So these are some of the things we are looking at to promote, to increase people, to increase on investment in agriculture.
Thank you, John. This was a very brilliant summary of what insurance is all about, agricultural insurance. So please tell the viewers, how long has this consortium been in place? And yes, you mentioned the number of insurers have come together to do something for insurance. But I know there is also some partnership with government. So we want to know how that works and how many people are beneficiaries, for instance, and why we should also tell these people to also be part of that group. So let's hear from that view, and then we shall dig deeper into the nitty-gritty of how much premium is charged. Whether is it on a yearly basis, is it per season, is it per production, say for instance, the chicks growing, we shall talk about all that.
Okay, thank you so much. Those are actually quite interesting questions, and each one of them would need a lot of time to handle. But just to break them down one by one, probably I'll just go back to when did agriculture insurance begin in Uganda? Agriculture insurance began way back in November, around November 2013, when some insurance companies did come up and consider providing agriculture insurance among their other insurance products they were offering then. And it so happens that at the time, of course, it was no secret, the losses in agriculture are real and they are big. And there's no guarantee that when somebody has suffered loss now, they will not suffer loss again. So what happened is the insurance companies came together at the time, like a syndicate of sorts. So they would partner together to provide the insurance to farmers. But given the limited number of farmers who were taking up insurance then, and their concentration in particular areas, you would find that insurance became quite expensive. The pricing was very expensive, because insurance in a way works on a principle of numbers, number one, and then also on distribution. How wide is the area? Because if you decide to provide cover or insurance for farmers all in the same locality, should anything go wrong, that means all of them will be affected, which means you'll have to get funds from elsewhere to be able to compensate, because all of them will be affected. Whereas with insurance, you're looking at collecting money from several people scattered over a very wide area. You collect money from all these people with the hope and prayer that not all of them will be affected at the same time, so that you are able to use the money you've collected to compensate the few that have suffered loss. So from that time, what happened is, because if the incidence of loss is very high, then what happens is the price of insurance is also quite high. So in so doing, because of the concentration and the small distribution of these farmers, the pricing was quite high. And because of that, you found that we did not have as many farmers coming on to take up insurance. And over a period of about 3 to 5 years, we only had about 5,000 farmers being registered for insurance, and most of those were probably from NGOs that were also trying to pilot insurance in the products they were providing. So with that experience, we looked at areas where insurance had been a success around the world, and we noted among those areas where it has been successful, their respective governments have been involved in one or another. And under the circumstances, we also approached the government of Uganda as insurers, who also were interested, knowing that over 60% of the population is dependent on agriculture, and the losses, the effects of climate change, and then also the financing of agriculture being limited then. And so government was interested, and from the goodwill the government had, they were willing to put aside 5 billion shillings every year to make as a contribution for farmers, or to subsidize insurance for the farmers, given the high prices that were there. And so the scheme began on the 1st of July in the financial year 2016-2017. And as we speak right now, we've completed 5 years, and now we are into the 6th year. And what happened then was the government had set it up as a project for 5 years, where they were to subsidize agriculture insurance for the farmers. And from the traction that we gained over the 5 years, you asked an interesting question: how many people have benefited? The benefits of insurance are relative, because number one, I would look at your question from the point of view that probably somebody got peace of mind, given that he has gotten insurance. And with that peace of mind and comfort, and even financials also on the other hand have been able to lend to more farmers, because they are also comfortable with the fact that there is agriculture insurance. So in a period of 5 years right now, from the original 3 to 5 years they're only insuring 5,000, the last 5 years of the Uganda Agriculture Insurance Scheme, we've been able to insure close to 300,000 farmers, which has actually been exemplary. Even we have a number of countries around Africa that are interested to learn from us. Some of them have sent people to understand how has our model worked. The World Bank has done a report, and it provided a positive report on the kind of traction we've gained over the past 5 years. And because of what has happened, so as not to lose that, the government decided to extend the roll-on of the scheme for a further 4 years, because the first 5 years ended on the 30th of June 2021. Now with this year, now we are beginning the first year of the next 4 years. So right now we are going up to up to the 30th of June 2025. So, and we expect, of course, better products to come in, improved products as we go on, because of course as farmers come on board, their needs and requirements keep changing. And in so doing, when we began, we only had one product at the time. First of all, there was the traditional agriculture insurance, which was not working for the small-scale farmers. And yet, with this, the government was looking at subsidizing, having more of the small-scale farmers coming on board. And why the government was supporting those, the evidence that the government was supporting more of the small-scale farmers was they were subsidizing 50%, paying 50% of the premium for the small-scale farmers, and for the large-scale farmers, just 30%. So with that at the back of our minds, we knew the biggest beneficiaries the government was looking at was the small-scale farmer. We had the traditional insurance, which was not working for the small-scale farmers, and then we brought in the technology one, which uses satellite, and this is the weather index insurance. And so that would come in and would be able to handle many farmers. Even if 1 million farmers are registered, you would be able to provide cover for them, and at a reduced cost, as opposed to the traditional insurance, which has so many costs that will not be affordable for the ordinary farmer. I'll give a simple scenario. When I'm speaking to affordable costs, we'll be talking about, let's say, a farmer who assuming is working on an acre of land. And from that 1 acre of land, this farmer is looking at harvesting 10 bags of, let's say, maize. And we'll take it theoretically to assume that, of course, it goes without saying, a bag is 100 kilos. So that means this farmer who is expecting 10 bags of 100 kilos each from an acre is expecting an income of about, is expecting 1,000 kilos. Okay? Now, assuming we are to go with the current rates of maize on the market, where a kilo of maize is right now costing 1,000 shillings. At least I know the poultry farmers owners are aware of this fact. People buying posho, I know the price of posho has also gone up to about 1,600, 1,800. But maize grain, a kilo, currently, the minimum you can get it for is 1,000 shillings. So, a farmer who is expecting a yield of 1,000 kilos, that is the 10 bags, each of 100 kilos, 1,000 kilos, and if he's going to sell each kilo of maize at 1,000 shillings, that means that farmer is expecting an income of 1 million shillings at the end of that season, for that probably that season. Now that 1 million shillings would be the value the farmer is looking at as income. And should anything go wrong, in case of a drought, and the farmer is unable to harvest the 10 bags, what they have lost is an equivalent of that 1 million. Assuming there was total loss, then they have lost an income of 1 million. So this farmer, they will decide to insure that value of 1 million shillings as the expected income. And should they suffer loss, then we as insurers would come in and compensate them to the extent of loss. Because there are instances whereby you may not have total loss, so we do cover partial loss. For a person expecting 10 bags, they might instead get 3 bags. That means there's been a loss of 7 bags. So we compensate for the loss of the 7 bags. But in the case of total loss, then it is the total 1 million shillings that is lost. Now the question is, if I am to insure that 1 million, how much do I have to pay? On average, we say our premiums are 5%, and that is what the insurer expects to be paid for you to transfer your risk from yourself to the insurance company. And that is the essence of insurance. You transfer a risk from yourself to an insurance company, but for you to be able to do that, you pay a certain amount of money. Now, the 5%, for example, is the amount of money the insurer would be expecting. So 5% of 1 million shillings would be 50,000. That is what insurance company is asking you to pay for you to transfer your risk. But on the other hand, the government is saying, okay, the 50,000 shillings, to encourage our farmers to insure, we will pay 50% of that. What does that mean? A farmer who is supposed to be insuring a value of 1 million, instead of them just paying 50,000 shillings, they will now only pay 25,000 shillings. Plus a 0.5% training levy, which is a cost that is borne on all policies, which is about 250 shillings. You'd find that now, which would be 500 shillings, you'll find now this same farmer is only paying 25,250 shillings to be able to get insurance, to buy a peace of mind, to buy comfort, even in the face of disaster. Like right now, this season, people are crying left, right, and center. The rain has become too much, and yet when it was starting, the sun was too much. So no one is guaranteed an income. But for you to have peace, assuming you borrowed the money, or assuming your life entirely is dependent on that 1 million shillings, all you need to pay is 25,250, and you're okay.
Thank you so much, John. This has been a very loaded knowledge, information we have gotten about agricultural insurance. It's existence in Uganda since 2016, we said, up to 2021, 5 years. And I think the timing has been right, that now we're entering 2022. And we want to see what is going to happen in the next 5 years. But how will it happen is if you, the clients, if you, the farmers out there, you people on YouTube, on TV, you are watching this, but you have to take this information down to your parents, who are the farmers, to start embracing this concept of insurance, because at the end of the day, we want you to keep your peace of mind. We know there are many examples of telephone farmers. The farms are out there. Remember, farming used to be for the very big farmers, But Uganda, we're mostly a subsistence economy. Our farms, we have maybe some farms in our homes. But even then, we have people at the workplace. We have issues of high labor turnover. Some of them, can do fishy things to hurt your plantations, your animals. Yet there is a bigger player in the picture here who can take care of all those risks. Yeah. So of course, I think one thing that John is talking about is, of course, we work with professionals, farming professionals like agronomists and vet doctors who come to your farm to see that you're trying to follow the good farming practices, such that should an incident happen, whether they talked about animal, imagine 60% of the losses have been as a result of drought. Now, there are also other diseases that those cover about 12%. So in total, that's about 72%. That means the rest of the 28% are other incidences, things like theft, I think. Okay, there are so many other things that can affect animals and also plants. Yeah, the weather, I think also locusts.
Yes, locust is one of the risks we do insure. Actually, we categorize them under uncontrollable pests.
Okay.
Then you have uncontrollable diseases.
Okay.
Then you have windstorms, hailstorms, and then of course frosts. We've had landslides also coming in there. Then yeah, mainly those are now the other risks we'll be looking at. But like we say, the lead among the causes of loss has been drought, followed by, and there's also fire also, because we've had instances where people have neighbors just before they begin clearing their fields, they decide to burn their gardens. But unfortunately, they may find when your crop is in the field, and in so doing, your garden also burns in the process. Yeah, so of course now those are mainly the risks we'll be looking at.
Thank you so much, John. I think you have really given us a very good perspective of how agricultural insurance works. You gave us a very good example of how you insure produce, things like maize that I talked about, if you're looking at about 100 bags of maize in a season, will charge you, and you're expecting that those bags are going to cost, say, worth 1 million shillings. In insurance language, we call it the yield. Yeah? And I think that's the promise we want to bring to you, that we want to make things as simplified as possible so that you understand what you're buying. So at the end of the day, you have to keep records. You have to know and estimate how much you're going to gain, so that you can know how much you are going to prevent to lose in case that incident happens. So once you actually have to consult us or reach out to the agricultural consortium before you plant, just before you're going to plant, such that we know that your season or the time we're going to insure you from the time of planting to the time of harvesting is going to take maybe 1 year or 6 months. So that we know now the patterns of how your crop is going to take to mature, whether it is coffee, whether it is tea, whether it is cotton, anything. And then when you go to he talked about poultry, there's also poultry insurance. We want to look at that date when you have just brought the 1-day-old chicks into the farmyard. That's when you want to do the inspection. But you also know your target market and when these chicks are supposed to mature and then you sell. So you must have a figure in mind from your experience. If you don't have good farming experience, then you have to start taking down records. So again, I would like to thank the Agricultural Consortium for giving us the time to explain in depth what they do and how relevant they are in the story of the farmer. They have told us their promise, Possibly one last question we shall ask, what is their promise on what is the claims experience like in case a drought has hit, or in case hailstorms, our weather can be so diverse, also averse. Once it has hit, how, I know in insurance we always say that the burden of proof lies with the insured. Now, how do they ascertain and give us, what kind of information do they need at the times of claim?
You may be right in the case when it comes to the burden of proof remains with the insured, but there are certain instances whereby really it does not even have to be the insured to prove anything. Reasons being, like in the case of the crop weather index insurance, here we are using satellite to monitor the temperature, the conditions throughout the season. So we have had instances with this product where farmers suffered loss. They did not even notice they had suffered loss. And there we were with money to compensate them for the loss. And they're not even expecting it. Because assuming one was expecting 10 bags and he gets 8 bags, to them, they think all was good. It was a good season. But the truth of the matter is there were these 2 bags that have been lost. Probably there was a dry spell for 2 weeks. But it so happened at such a time whereby the crop recovered. And they were able to get the 8 bags. But it did not recover fully. There was still an element of loss. So under such circumstances, really, what kind of proof will the farmer provide that he suffered loss? He doesn't have any proof. So actually it is the satellite information. We are the ones who go and tell them you actually did suffer loss, and we have compensated them, and many have been excited and have been buying insurance since then. There was a question you had mentioned earlier on, which unfortunately I think while we're discussing I forgot, is how oftenly does one have to pay premiums?
Yes.
The money for you to get the insurance. Now that depends on the kind of enterprise you are into. It's what dictates. Like for example, if somebody is going to plant a seasonal crop, like beans, that means when I plant it in March, March or April, I'm expecting to harvest it by June, July. So those ones pay every season because what they are planting is seasonal. Because I might plant 1 acre now, but because of the comfort and peace I am having, come next season, I plant 4. I plant 5 acres. I'm able to borrow money. I say, no, I think I can sink more money into this. So, because every season, you may even plant a different crop. You may have planted beans. Like, for example, I think somewhere at the beginning of the season, we were told the rains were going to be quite brief. So people advised to plant short crops. Short season crops. So you find that if I planted maize last season, and now I'm being told short season crop now, I'm going to shift something that will grow and in the short time. So for seasonal crops, every season we pay for what we have what we have invested, yes, or what we've put in, or what the amount of money that is at risk. Now when you have perennial crops, like let's say coffee or tea, you look at now the income you expect to get in 1 year. And using that, we calculate your premium you'll pay, and for you, you'll pay insurance for 1 year. We do assign vets, we do assign agronomists who go to the farmer's garden, do an assessment there, and they will give recommendations, technical recommendations, what you need to do, what you need to improve, what you need to have in place to safeguard. Like, for example, today there was a report I received from a vet. There are these farmers, they are looking after piggery. But because of the kind of piggery they have in a particular project, there's a way they are supposed to be treated. But the same farmer, yes, has other animals that is looking after locally. Yes. And we are saying, no, you need to do what? Look after these animals. Probably you need to improve the other animals that you are looking after, number one. Number two, you may need to have a small fence around where these animals are staying so that you minimize on contact with other animals, because we've heard of cases of swine fever. Yes. Once it comes in, It's contact of one sick animal with yours, and your entire herd is gone. So there are those recommendations that would be given, because like now there's this cram work we have in Uganda here. The moment I'm going to plant, I'm going to apply fertilizer. What fertilizer? People just go for NPK. But NPK is an acidic fertilizer.
Yes.
But the agronomist may do a soil test for you and tell you actually your soils, the soil is already acidic enough. You actually need to add lime. Instead of you putting more acid, you are going to make an already bad situation worse. So that is when our agronomists come in and they help you and say, you know what, no, actually for you, you need to apply this other kind of fertilizer. Is what it will help you.
Thank you so much, John, for this informative information about agri-insurance in Uganda and how simple it should be really. Since we are into mostly subsistence agriculture, that should telling us that people can insure with as low as 2,000 shillings, as long as they contact us in time. I think we have to give them some kind of proposal form. They fill out, they give us some information about their farm, isn't it?
No, actually, for those small-scale farmers, all we want is a list. In their local group there, it doesn't even have to be registered. We can organize ourselves. We say we are 30 farmers here. Yes. What are you planting? Who's one is planting what? How many acres? How much are you expecting? What is your phone number? And that's basically all. What district, the district, sub-county and parish, we are interested in having that information, because the insurance regulatory authority that helps us to claim the subsidy from the government has got to actually verify the farmer actually does exist. You've heard of instances where at times people are talking of ghosts. So we need to have details of these farmers. And from time to occasionally at times, we do go and even gather testimonies from the farmers wherever they are. So what happens is just basic information. They give us a list of a list giving that information. And if there are 30 of them, probably it's just on one full scalp. And we'll give them what we call an insurance policy. We'll tell them how much they're supposed to pay. And when they pay that, we'll give them a policy. We've tried to make it as simple as possible. And we want to deal with the farmer where they are. We don't want you to incur transport costs again. You spend 10,000 shillings to go and pay 2,000. No. Let's find you where you are, your group leader, you organize, you deposit the money on an account, and you get your policy where you are. Pay your 2,000 shillings or 3,000, depending on what you're expecting. Yeah.
Thank you so much. This is very valuable information. I hope the farmers out there are going to embrace this. The information is just around now, as simple as clicking Agri-Insurance in Uganda, and you get to know where you're supposed to go and get this insurance, so that you get a peace of mind. You find us are also going to get confidence and add more investment into your business. Possibly you go now for value addition. You concentrate on your core business. You will not go into value addition, because the fear you are having whenever you leave your farm will be transferred to the insurer. So I can't say it better. Thank you so much, John. One last question. I want to hear the promise of Agri-Insurance Consortium to the farmer out there in terms of the claim settlement. How long does it take? Is it different from livestock, say the cows or the pigs, from that of say coffee farmer, things like that?
Okay, when it comes to livestock, our claim period is about 3 weeks time. We should have paid you after you've provided us, let's say, with the information. And then, because what that requires, let's say in livestock, we need at least a post-mortem report from a vet who will tell us what happened. And with that, the moment we confirm it's genuine, you get your compensation within 3 weeks. You should be having. And then when it comes to crop insurance, at times, there are times challenges we get when we are assessing the losses. There are some delays here and there. Some information may take a bit of time to come through, but we are looking at about maximum of 6 weeks time. By then, we should have compensated you. Yeah.
Thank you. You have had it for yourself. Those are 3 weeks for mostly livestock, and then for the crop, it may take up to 6 weeks. So roughly between 1.5 month, about
1.5 months, yeah.
Maximum 2 months. Really. But I mean, this is the kind of confidence we're giving to you because you're coming from the horse's mouth. And what better time to know that government has also invested in this insurance? The first of insurances that government has embraced for the last 5 years, and they are still investing more. I think from what I got from you, that we are having about 5 billion invested by government to help you subsidize on your premiums that you bring in as at whatever level of a farmer you are, whether you're a small scale, medium scale, or the commercial large scale farmers will have got you covered. Till next time, I remain Emmanuel Safali, bringing you the Promise Show, and in collaboration with the Agricultural Insurance Consortium, John Makosia. Thank you, till next time. Better to hope for the best while preparing for the worst. Thank you.
Thank you.